A shocking and unexpected event has just taken place within the SHIB community. The whole supply of SHIB tokens was depleted in under 1 day. It wasn't just a slow stream of minor burns or an ordinary neighborhood cleanup. It was the largest organized flash burn in SHIB's history, surpassing all prior deflationary efforts. Telegram groups went boom as dashboard burn numbers went light. Confidential channels blasted. And the question that halted all traders on the main exchanges was, is this the end of zeros? The enormous supply of SHIB has been its main problem for a long time. The many zeros that accompanied SHIB's debut token supply of over 1 quadrillion served as a continual reminder of the meme coin's humble beginnings and the lengthy journey to mainstream valuation. Although investors were ecstatic about previous burn events, they failed to cause a significant change in supply that would have led to a prolonged rally. However, 500 billion in a single day is distinct. This deflationary shockwave is strong enough to redraw the price trend of SHIB and equals a 0.05% cut in total supply in hours. From a cautious optimism to pure exhilaration, community feeling shifted as the burn frenzy developed. Developer team insiders revealed cryptic warnings regarding rapid deflation, while on-chain researchers noticed whale wallets moving enormous amounts into defunct addresses. The noise level on X was through the roof. Zero deletion memes got popular, and longtime holders finally shared screenshots of their green portfolios. What seemed like just another pump track became a possible paradigm shift due to the widespread elation caused by a noticeable shift in supply dynamics. The underlying mechanisms of token burning are straightforward. When tokens are sent to a dead wallet, they disappear permanently from circulation, making them more scarce. In the cryptocurrency market, a combination of low supply and high demand leads to rising prices. Nevertheless, burns seldom operate alone. Conditions, loudness, and story all need to be just right for them. All three were utilized in yesterday's 500 billion token burn. It happened at the same time as a boom in whale inflows, an increase in trading activity, and the developing narrative that the end of zeros was almost here. Indeed, whales have been aggressively maneuvering, according to on-chain statistics. By transferring tokens from exchanges to cold storage, large-scale addresses amassed trillions of SHIB in the last week. It appears that individuals with substantial wealth or institutional backing anticipate that the burn event will trigger a retail usually follows suit when whales pile up like this, making the purchasing process more difficult. The conditions for a spectacular price run are practically perfect when coupled with an abrupt 500 billion cut in supply. The market price movement was reciprocal. Following months of being trapped below the 4mx15 resistance, SHIB surged 4% in the hours after the burn news, momentarily teasing the 4mx18 resistance. The action broke the inertia that had confined SHIB in a small corridor, though it didn't immediately leap to new heights. The sharp increase in futures activity and open interest suggested that traders were placing bets on further price gains. As a general rule, more leverage is seen before sudden and dramatic price increases. The zero deletion psychological effect is strong. Those zeros represent more than just numbers to a lot of holders. On the road to significant pricing levels, they serve as obstacles that end up being self-fulfilling. A psychological milestone is reached with every zero that is dropped. Proof that the project is moving forward as planned. The FOMO, fear of missing out, is at an all-time high now that the community has hard evidence of the supply decreasing. The allure of green gains has now emerged for traders who have been observing red candles for months. Also, when fear of missing out sets in, market fluctuations can be rather severe. The evolution of ecosystems is making matters worse. With the beta integration of burn-on-transfer features, every swap on Shibarium's Layer 2 network, which handles millions of transactions every day, contributes to deflation. Exciting new decentralized application platforms (dApps), non-fungible token NFT networks, decentralized investment DeFi protocols, and gaming websites are popping up all the time, each claiming to facilitate more token sinks. Scarcity is exacerbated by the self-reinforcing nature of the burn mechanism and the growth of on-chain activity as utility increases. The supply and demand ratio is currently strongly skewed in favor of the bulls. The equilibrium price rises as there are 500 billion less tokens competing for the same amount of demand, and as new use cases are driven by the potential utility of the tokens. When combined with this type of supply shock, models reveal that even a small increase in daily volume can push SHEB to the next zero deletion at 309. Following that, additional deflation and adoption may go to 204 and beyond. Revising objectives for the future. From a technical standpoint, SHEB has created a huge rounded bottom during the last quarter, which is a pattern that frequently indicates the beginning of strong rallies, until the breakout is confirmed by volume. That confirmation came yesterday in the form of a burn occurrence. With a 125% increase in volume, the price remains stable above the bottom's upper arc. The possible breakout over 4mx20 is being eyed by chartists as the catalyst for a parabolic leg. Macro factors provide support to the idea, as Fibonacci extensions indicate objectives near 4 to 0s25 and above. Bitcoin's recent surge above $70,000 has boosted investor optimism in the cryptocurrency market, which usually results in a flood of funds into alternative cryptocurrencies. As regulations in key markets become more transparent, investment firms are looking for opportunities with an uneven risk-reward profile. The token now meets that requirement thanks to SHEB's substantially accelerated deflationary profile. However, possible dangers still exist. Holders who opt to cash in may see significant pullbacks due to the massive profit-taking potential with each zero deletion. There may be a brief alleviation of selling pressure if exchange inflows surge in response to price increases. The effect of the burn could be nullified by unfavorable news, a market-wide slump, hack rumors, or protocol difficulties. Meme coin rallies frequently come to a sudden stop when public opinion changes, as history indicates. Institutional bias complicates matters. Today rumors spread that SHEB was named one of the top 10 undervalued currencies by a large crypto fund, with the burn event being cited as a major contributor. Trading desks may front-run deposits if these funds seed large holdings, leading to volatility in the near term until long-term purchasing pressure stabilizes. Flows like these might quicken a breakout, but they can also make corrections worse when profit-taking occurs. The community's values are evident despite the chaos. Many now look up to long-term holders, the diamond hands who bravely weathered every dip, as trailblazers in the burn movement. Social media campaigns have emerged with unifying mantras, such as Seacher's End of Zeros and the Urge Ship Scarcity, bringing together traders from all over the globe. Keep going even when the going gets tough. Enjoy the benefits of gold's deleveraging. By harmonizing sentiment across platforms, this unity boosts momentum. When does this end? The development team has dropped hints about potential strategic alliances that could boost utility and additional burn-on transfer enhancements. There have been whispers that SHEB is planning to expand its reach through partnerships with big payment networks and cross-chain bridges. With each new demand-inducing stimulus, the deflationary effects of ongoing burning are heightened. Now that the historic 500 billion token purge has passed, the market is at a crossroads. Validating the burn approach and unlocking fresh all-time highs would be possible if SHEB can maintain above 4mx20 on strong volume, which would put the next zero deletion at 3mx09 within reach. If these gains are not maintained, SHEB could go back to consolidation, which would make us reevaluate how effective the burn was. One thing is certain though, the storyline has changed forever. Everyone from institutional investors to retail traders is keeping an eye on SHEB, the world's favorite